Uh, so it can record the minutes, so you don't have to worry about that, and I'll give them to you at some point, okay?
Sure. Yep.
So the bot is recording the whole meeting. So we're good there. And, so how many people we got in the, I can't see right now.
Now it's just us.
Just us?
Yeah.
Okay. I'll just hang around a little bit. We'll keep a little bit of time. I did a shared one too, and I'm wondering about that, but I was going to test it with Leah and Alicia. So it did work. So she answered my question. Alicia. So I sent it back out to her through another way.
Okay.
It works. It works. We'll give it a few more minutes. Stephanie, what's the weather in Cyprus right now? I just so jealous.
Right now we're around like 15 degrees Celsius. Since you guys use Fahrenheit, just to make that clear. It's getting cold because in the morning it's warm and then we don't have an average. It just goes from hot to cold. So we feel the difference pretty hard. So it's getting cold.
I think Lou, that's you. Did you join?
Yep.
Lou Bates is in. Okay.
Yep.
Yes,
Okay.
I did. How you doing?
Pretty
We're on our
good.
way to the physical part.
You on your way here? You coming here?
Yes. Yeah.
Yeah, perfect. Be good. I'm gonna give it a few minutes, let people come in, and I know it's a Saturday, and I appreciate anybody showing up on a Saturday. But it was the only way, and the only time I could really break away. So then it's contract. I'll talk about that a little bit too, because that's part of grand scheme of things.
Okay. Yeah, I've got myself and Faith here. So, like I said, we're
Yeah,
on our
yeah,
way.
excellent.
We'll be on mute.
Yeah, it's all good.
Thank goodness you gave me her phone number. I know, right?
Yeah, I already know you already took it. I'm sure you did that.
Oh, I did, not yet. I'm trying to get this internet working. I need a cracker.
And it's always warm there.
There's gold sheet for you. There you go. What is it? Blueberry?
Okay, we're gonna go ahead and get started and, appreciate this. And I mean, it's our first annual general meeting. And what this is for is it's a regulatory thing too, but, we like to invite people. I try to touch, all the shareholders as much as possible, through newsletters and then social media, but this is really a time for me to share, performance, where we're going, vision, all those kind of things, but sometimes that adjusts and change as we go forward. So I appreciate everybody taking the time to come in. Here's the disclaimers right here for this. If you have any question about anything or any requests for anything, you can always reach out to Stephanie, and her email is right there at the bottom. So just standard stuff with any kind of general meeting that we have. So right now, what we have is the agenda, and I'm not going to read through that, but we're just going to take you through that. We're going to do some formal stuff that we have to do. I'm going to then go into a report, go through some financials, talk about some resolutions and special business that we have. And the resolutions and everything, since this is the first annual general meeting, there's no approval of any minutes or anything like that we would have, because this is the first meeting. I will ask, are there any questions before on the agenda itself? And if you have some questions, I can't see you right now, and I can't see you, so I would just ask you to just speak up about that. And if there's silence, I'll assume that there's no questions or concerns with the agenda. Okay, so we'll approve the agenda. We don't have to be too formal with any kind of parliamentary procedures, because we're not structured or set up that way where everybody needs to vote. We sent out a proxy and vote. So we'll approve the agenda as stand, and then we'll move on. Let me just lay out a few ground rules. What I'd like to do is, often people have questions, and that's fine. And I love questions. And that's why I want to spend more time with the Q&A and just talk to everybody. But I do want to present some material. And what I would suggest is that if you have a question, put it in the chat and we'll get it, and then I'll address it once we get the Q&A. For the people that's physically here, and we have maybe a couple of people, they can just hold questions to the end of the presentation, and we'll go into Q&A, and then we'll talk and speak. And then once there's no more questions, we'll adjourn the meeting. Are there any questions so far with that? Okay, great. Welcome to our annual general meeting. Today, we're going to share with you what we are doing. And I can tell you, ladies and gentlemen, we are knocking the cover off the ball this year. I'm not exaggerating at all. The growth has been tremendous. I'm extremely proud of what we've been able to accomplish. We still got a long ways to go, but we're doing very well. And I'd like to thank the people that are on this call, and then also the people that are not on this call that was part of the Founders Round. Thank you. We successfully finished the Founders Round, and we're marching towards our second round. And I think we're picking up tremendous momentum. So I wanted to open up with that first. Let's talk about our investment philosophy. Many of you have heard me already with a pitch and talk to you about it, and that hasn't changed really at all. We're deep value investors. We're looking for deals. We're looking for steals. We're not going to overpay for anything. And we're sticking true to that. Most of the assets that we're acquiring are at levels that are usually below book value right now, and we'll continue that throughout. We're in a good industry that has some good bargains out there, and we see that continuing even though it has picked up momentum due to geopolitical issues and supply and demand uh, opportunities. So we look at our vision overall as a whole, as a high level. We're going to continue again to focus on value assets, but I wanted to talk about, I mean, the vision does get altered sometimes as you grow. And what I see us, where I see us going is to continue to build this particular portfolio to a certain point, and then we'll close it to new investors. And then from there, we will probably start up a newer, bigger and badder fund on top of that, because once we get to about the 5-year mark, we'll liquidate this and then give it back to investors plus any accrued gains or interest plus principal, all those kind of things, along with dividends along the way. And then people will have the opportunity to go into PPI too, which is bigger and badder and everything else. And so we just see ourselves being a player in the mining sector and private equity throughout. And so we really are looking forward to continuing this journey and being dominant. Leah, put your mic on.
I'm cutting.
You- Okay.
It's on there.
Okay. Listen, put it on me. Put it on me. Put it on me. Put it on me. Okay. You got to turn your speaker off in your mic. Okay. Sorry about that. So going forward, as far as value creation goes, how are we going to create value for investors? Really simple. We look for assets that are deeply valued, undervalued. We do our due diligence and we acquire them. Then we do active management work with these assets in order to increase the intrinsic value. And then at some point, we're either going to sell it off to a mid-tier major or we're going to take it to extraction. And that's our MBMP process that we have, minimum viable mining process that we've coined and phrased. So that's how we generate value. So we're buying low, selling high, but not buying, hoping and praying. So when we look at our overarching thesis, there is a reason why we chose this sector, or at least I chose this sector from 3 years ago. And I know people like Stephanie, Tony Maragakis, MFD Holdings, all these other players that are involved. But I've been a consultant in the mining, heavy industry, and oil and gas space for nearly 20 years. And then prior to that, capital markets. And so about 3 or 4 years ago, maybe, I went to an investment conference with the founder of MFD Holdings, who's our sister portfolio. And I saw ridiculous value in these companies. I couldn't believe it. In fact, some of them were even had market cap lower than what their cash was on hand, which is absolutely ridiculous. And so what we see here is that we have this industry until this year, actually, has been in a bear market for nearly 13 to 15 years, junior mining companies. And so can you imagine taking losses for that long and what that does to the market? It makes it to where it's screaming value. And so there is an investment gap because we all know that minerals are needed. We look at technology, we look at the new infrastructure, alternative energy sources. You're hearing it on the news that the Pentagon is now stockpiling critical minerals. It's the new oil and gas, in my opinion. That may be a strong statement, but I've been saying that for the last 3 years, and it's definitely moving towards that. But what that means is that even though it's such high demand for this stuff, there hasn't been enough capital flow to get the deal flow to meet the demand that's out there. And that creates opportunity. That's the investment gap we're talking about. And so as these distressed assets become available, or are they already there, we need capital to buy into. And that's where all the investors and everybody come in at. We know where the deals are. We know how to analyze them. We know how to grow them and make them better. We need the capital and the fuel to be able to do it. And then finally, we're not out here guessing, praying, hoping. Prayer is great. I love it. It works. But with your assets, we got to do more than that. It's not a lucky thing. It's evaluations. So in essence, we're not betting on exploration. We are betting on inevitable supply and demand physics. Science is what we're going to deal with. And we're going to make a lot of money. So when you look at the problem, and it's really simple, and I've mentioned this before, is that they're asset rich and capital poor. And what that means is that it takes a lot of capital to build a mine. And so just to give you an example, when you're even at the exploration stage of it, there's a lot of drilling, sampling, and lab work and everything else. And you need experts that are very expensive to do this kind of work. PhDs in geology, and PhDs in metallurgy, and then you need experts that know how to drill and operate this equipment. And then you need someone to analyze it in the labs. And then there's some studies that need to be done. I can go on and on. And then factor that along with where these mine sites are located. They're not exactly located in metropolitan areas, as we already know. And so what that means is that you have to fly people to these places a lot of times. And then if they're remote, then you got to get them on a chartered plane from that particular hub and then to the location that they're at, if they have an airstrip. If they don't, then you got to bus them there. And so you can see all these costs that are involved in doing this. And so factor in all that, and then you're in a bear market where there's not a lot of money coming your way. You can see the opportunity as clear as day. So that's a problem. Many viable projects fail not because of poor management or poor geology or anything like that. It's just capital. Right now, that's the problem. That's the main problem. Sometimes it's bad management. I mean, we back up as we do check that. But oftentimes it's the lack of capital because things happen when you're exploring. You're trying to find something that's deep underground, and that's not easy to do. And it takes some skill to do that. And sometimes you're not right. And it might be here, but it needs to be there. And so, that's some of the opportunity. And then, many PE companies ignore invest into these because they're so big and they have so much money that they can't take the risk or do the due diligence to analyze these small junior mining companies. They're microcaps. And so that puts us in a position that we're smaller and nimbler, that we can go and take on some of these positions without taking over the entire company and still get outstanding growth and returns. So that's the problem with this industry. So we got not enough capital, things that are beyond their control in many instances. And then the big money sometimes doesn't want to commit or have the risk of going into microcaps because it may not be part of their objective and things like that. So those are some of the problems, but the good news is we have a solution. And so what we can do once this capital and with our experience and expertise, and like I said, I've been in there 20 years doing this. The rest of the team is somewhere along that range. Within the immediate ecosystem, we're looking at 200 years plus experience. And then if you start to look at even within our ecosystem outside of our inner core, it's endless. We know what the hell we're doing. We take these paper assets and we improve them. So again, when you hear or talk to people or investment people or Wall Street, they will look at numbers. They will buy assets, but are they involved in the company? That's the difference between private equity, is that you have more active management. We're giving advice, we give board seats. We're making strategic decisions with the management, and we're providing capital. And then finally, we de-risk the asset. And again, how do we do that? Providing the right amount of capital and advice, providing resources, networking opportunities to help them raise money. I sit on the board of directors of Palangio Exploration Inc., and I do promote Palangio when I'm out. People will ask me, well, what's the, I may not want to commit this amount of capital into your fund, but is there something I could do that's a lot smaller? Or something? I may mention, well, Palangio, I'm on the board. I've got a pretty sizable position in it. In fact, as an insider, I've got the second largest holding behind the founder of the company. So I believe in it. And I don't mind being an ambassador to Palangio. And so this is through our networking, we can de-risk these assets by attracting a different capital and everything else in the third. So there's a problem we have, and we have the solution, and it's starting to work well. So let's look at this. So everybody, I think, knows this guy. But when we started this, and I could say, I guess, it was a one-man gang at first. It was me, myself, and I. And at some point, you're going to need help. And I didn't expect I would need help this quickly. But now we've grown, and we've grown tremendously. I think everybody knows my bio or what I can do, but essentially I'm running the investments, making sure that we're finding good deals, acquiring them, doing due diligence, making sure the team that we got on the field is doing what they're supposed to do. I have a coin saying that I like to say that this differentiates us away from Wall Street. We got boots, not suits. Now I got a suit on today, but we got boots on the ground. And if you think that a Yale graduate that's never done anything in his life tough, I'm from Philly, so I've been in fights before, those kind of things. But if you think a Yale graduate or a Harvard graduate, right out of business school, 26 years old, is going to know more about mining than me and my ecosystem, I would take that all day. And I would also say that these folks are probably not going to visit a mine site in West Ghana in the middle of nowhere, or go to South America in the middle of nowhere, or in the subtropical areas in certain remote locations, or Arctic, around the Arctic Circle, or any of these places that I've been to. They're just not going to do it. It got cut out that way. But yet still people depend on these folks to tell them how to invest. So I'm going to introduce you to the team, and we've grown tremendously. So this is our team that we're all global, by the way, I might add, but this just means we're based in the US. So my wife, Leah Jones, is a co-founder, and she's helping me get in front of more, essentially leading strategy and helping us kind of increase our reach as far as accredited investors. And so she's out there networking and schmoozing with people, and the people just like you in different networking circles that are outside of my network and Joycelyn's as well. I don't know any of these folks. And I'm this mystery dude now when she's talking to them, because I've been so busy and I haven't been able to even talk to them. Joycelyn S. Pearson, her resume speaks for itself, and she's going to talk a little bit later about what she's doing. I'm so impressed with her. I told her I don't even think I can afford you when we first started, because I've seen her resume, I know her caliber, and every day that I engage with her and talk to her, I'm impressed more and more with her abilities. And then she's not afraid to speak up and push back against something that I may want to do. And that's what you need. I'm like a bulldog, and I have a strong personality. But I also understand that you have to lean on others to get where you want to go. And so she's doing a tremendous job for us. Devontae Williams is our general counsel now. That's right. I didn't have a lawyer, general counsel at first. I was kind of the lawyer, talking to other lawyers and kind of doing stuff. And as Davinci saying, we're flying and building the plane at the same time. I mean, that's what it's like when you're in the founders round and when you're starting something new. It's exciting and you're moving quickly and you can't wait for everything to turn green. You got to go. And that's how I've always been as a consultant and as a person. I'm aggressive, everything else. But Davinci and I go back 30 years. We were cadets together. He was a couple of years ahead of me, and I've known him forever. And I talk with him all the time, even outside of business. And he's been a good friend, and he'll be a good lawyer for us because he's smart. He learns quickly, and he's very sharp when it comes to contracts. And so as we go forward, he's going to add tremendous value, and he's going to keep me out of trouble. And that's what he's there to watch my back as I'm trying to grow to make sure we're compliant and everything else. So that's the US team. We got more. We got a Cayman Island team now, obviously. So now we have a lawyer in the Cayman Islands, and we're going to talk about why we have to have these people. And oh yeah, we have an auditor now. So I can't just take you guys' money and go buy Lamborghinis with it or big houses or whatever, because there's regulation when you do this. And when we first started, we first started US based, and then before I even talked to most of the people that I raised, all the people that I raised money for, other than the seed money I got, we were US based for maybe 2 or 3 months, and then we had to move to the Cayman Islands for many reasons, which Davinci will talk about. But now I've got Candace watching my back on making sure that our books are clean and that we're reporting right and all of those things that are needed and that can't be done by just any old accountant that has a CPA or a degree or whatever. So we got now our Cayman Island team that's making sure we're compliant and in compliance with the Cayman Islands. And so, and then these people are very talented as well. Yale educated, ironically, Candace went to Yale. Yeah, these people are very sharp. You can look them up on LinkedIn, very experienced folks. And then I got my compliance team, and this is Team Europe. And they've been watching my back from day one. Fortunately, through MFD Holdings, as they were starting out, I had the ability to have these folks doing my shareholder register. And you've seen Branimir. Most people have seen Bran. Manolis, you may or may not know, but now Stephanie is leading just those things, and Branimir will assist her because Brand's doing a lot of MFD. He can't lead both of them. So they're both highly skilled people. I trust them with my life. Manolis helps with the communication that we have to our mine sites, to our customers through newsletters. And we put out a newsletter every quarter, and he helps with that. And then and he works with Joycelyn and some other people and Leah when it comes to some marketing ideas and everything else. So we've got these folks. And then if you count our advisory board, I got to pick up a new board member. And if you look at the people in the field, I mean, the team's grown a lot. It's grown beyond anything that I could have thought of this quick. Okay, so let's look at what we've accomplished in 2025. And these are just some of the big milestones. So we've exceeded our targets in assets under management. Even when I put out the balance sheet, that was the end of November, our assets, we're knocking on the door of about 6 million right now. We're right at knocking on the door of that. And that's because of some of the public assets will fluctuate somewhat, but that's without raising another penny since then. So we're in good shape there. I had made some stretch targets, and 5 million is where I wanted to end up at by the end of the year. We had 6. So, or roughly there. So we've knocked the cover off of that. My anemic 30% ROI that everybody remembers. Try 4.5 times, 4.5x, 450%. I mean, I cringe when I put that number, but I could put it down. It's been a year. And so we're getting tremendous growth. And a lot of that is fueled by the public assets that we were buying. Again, deep discount, and then there are warrants attached to them, there's money along with geopolitical favoritism that we're getting and a lot of other things, and we'll talk about that. We've even grown our ecosystem even more. I'm actually starting, as MFD has grown a lot and a lot more, and are now really highly focused on the private stuff. I'm getting even more deal flow from the public stuff that they would get calls on that we're now starting to get. And so we're taking larger positions. We started out, I mean, our positions now will at least be 100 US when we go into something, which is not bad but it's very good. Let's say the market cap of a company is $2 million. You got 100,000, that's a 5% stake in the company. And so that means you're a major shareholder. We go to 20, I mean, you got to now start reporting that you're making a move. We don't want to get that big because we don't want people to know what we're doing yet, but you get the point. You're essentially almost an insider. You got 20%. And then the exposure, and I'll show a map there. We're in 4 different continents right now across the world. We've got critical minerals. We've got all sorts of things. We've got gold, we've got silver, we've got titanium, graphite. Manganese, just to name a few. I think it's some other zinc, zinc, lead. We've got a lot of exposure, and that's intentional. We are focusing on critical minerals and precious metals. And some of those actually fall into a bucket that's mixed, because silver is also a precious metal, but it's also a critical mineral too, and so it's copper. So we're in all those and have some exposure to it. And then last but not least, and this makes me sleep at night, I got a burn rate of 17 months. Now, what that means is that cash on hand and the cash receivables I have, based on the expenses that we have, I could survive without making a penny, without raising a penny for 17 months. That really is comfortable to be in. And part of it is because I've deferred payment to me. I'm going to get paid, but I've deferred it as we grow the assets to a certain point where you can afford a guy like me. And what I've been doing, I've got a nice contract that I'm working. So rest assured, I'm keeping expenses down. I'm investing it into other areas to help us grow. And then eventually, once we are big enough, then I'll take the realm and enjoy the fruits of my labor. But that burn rate is nice. And you can't beat that right now. So we got plenty of liquidity if anything was to happen. I like this, and I think it's me and Joycelyn was talking at one time. She said, "Can I show what we're doing?" I said, "Okay, it's been a year." The returns, I cringe all the time because I know how it is when people are talking to other folks that are not exposed to these kind of investments or don't understand our business, don't understand, all they understand is what they've been taught to sell. They will have and say certain things like Bernie Madoff and all this other stuff that has nothing to do with what we're doing. But these are legit. This is just the public stuff. I didn't even put the private stuff in, put the private, bump that up another 100%, but this is year to date, the portfolio results. Also, it doesn't include the warrants. So this portfolio has performed 332% from when I first started with our first position in Pelangio. The management, me and my wife are the largest shareholders of this thing, so I got a lot of skin in the game. I put everything on the line with this, and I'm telling you, everything. I sold my big house, got the hell out of that, gave my car away to my daughter. All I got is Leah's car that she drives, and 30 on that or something. I am right where I need to be at. And so then I can grow this, but most of my net worth is in PPI. I'm not gonna lie. It's grown a lot and it's nice, but it's good. We've got some institutional investors over here, so we can see that allocation that you can see. It's a bank and a family office. And then we got accredited investors making up the 11%. What I'd like to see, and what we'll start seeing, is I'll start diluting myself some more. And that green pie slice, we'll start picking up more accredited investors that are not institutions and family offices. And that's kind of the plan. We'll pick up some more family offices, those kind of guys, but I'm thinking that number will grow. If we look at the asset allocation down here, and you can see the different minerals that we have, yeah, we're highly exposed in gold, but gold's gone up so much. Silver's starting to make a move, and we've been picking up some positions in that area through some royalties that I'll talk about too. But you can see we're starting to get diversified. Our gold will still be probably our highest asset allocation because gold is easier to mine. It's also, it's more lucrative per ounce than mostly anything else. That's being mined, and that includes even platinum. So look for that to be, still our biggest, but we'll get into some other areas. Okay, so let's talk about some of our key acquisitions, and there's 3 up here. I'll talk about Palangio, we're gonna sit on the board. We had a pretty big position here. Thunder Mountain Gold that we have, and then Falcon Energy, which is more of something that I want to de-risk the portfolio and stabilize. But so we got gold. Thunder Mountain is zinc. It's a polymetallic ore body, which means it's multiple minerals, but there's zinc, silver, gold, some lead, and a little bit of copper there. US based. These guys are out of Canada, but the assets in Africa. And then Falcon is Canadian based and in Dubai, and the asset is located in Morocco. So looking at the activities that we've done with Palangio, I have explained what an MRE is. It's a mineral resource estimate, and all that is telling you how many minerals you have. That came in at 850 troy ounces, roughly up from 450 from the last MRE. So immediately you doubled the intrinsic value. We did participate in 2 private placements with Palangio, so we increased those positions. One of the warrants are in the money, one is not, but knocking on the door there. And Palangio went from very broke, probably in 2024, July, when I first joined the board, 2.5 million market cap, up to 47 million market cap. So I'm taking all the credit for that as far as being on the board. I'm teasing, but I'm gonna take some. I'm teasing, but I'll take some credit. I was on the board when that instead of a turnaround guy. So a lot of success. When you include warrants, our position 16%. That's a whale that we talked about. Once we hit over 30 cents a share, we started buying Palangio at 2.5 cents. Just to let you know. That was at about it's bouncing between 22 cents and 30 cents right there. We believe it's going to be higher. And now we're actually starting to attract some potential buyers of that asset. And I can't tell you too much because I'm on the board with that. But I think if we're looking at least 4x on top of where we are now, that'd be a home run. That would take our position in Palangio. Our position in Palangio, if you include warrants, is almost at about $1 million. But that'll take us another 4x. Do the math on that. It's about $4 million. Liquidate that. Dividends going out to investors, which I'm one of those people. And so that's a good story there. Thunder Mountain. I like these guys because you're seeing the news. You're seeing what they're talking about with the Pentagon and the Department of Energy stockpiling minerals. These guys are on Trump's Fast 41 program, and all that means is they're going to accelerate the permitting so they can start doing something. MFD is in the news too. MFDSA, which is our sister portfolio. You can pull that up and see the press releases. They're very heavily involved in this deal and helping to work on. We're actually taking this to extraction, guys. It's very exciting stuff. We're going to do some small scale mining with this. So, man, that's huge. They go from exploration to actual mining, and we think we're going to attract some support from the U.S. government, probably as it's there, because this is important. They're producing zinc and all these other things, and We have an investment with them, a pretty sizable position. But what we can also get, once we raise more money and get to be bigger, you can participate at the project co level through an SPV, which is a special purpose vehicle, that can then acquire even more cash flows. But we're in a nice position right here. They raised some additional capital. It's getting so much easier now. I mean, it was oversubscribed before it was even announced. And our position there is up 12x, 12.5x buying his warrants. We started buying Thunder Mountain at 7 cents. It's at about 91 cents now. Ridiculous run. All the warrants are in the money. And once we get to the point, this SPV that I explained, this will generate 800 million to 1 billion. That's in the news. You want to take my word for it? That was the projections. The conservative side, 800 million, 1 billion over 10 years. I'd like to raise maybe set up an SPV, PPI, and some real big hitters come in and then get a piece of that. Because in order to get invited to this party, we're gonna need to bring in at least 2 million just with that one position. So I want to de-risk again. I don't want to commit everything and try to do that. What you do is raise some money, you set up another entity and take that, and some of the, people that might got, 50 million, 100 million net worth, whatever, can take a lot of the risk. And PPI as a portfolio would lead or not lead, but participate and have a percentage of something like this. So been talking with these guys. They're now, they're just waiting on the permitting. That's going to happen in a red state, Idaho, Trump, pro-red.
Of course.
Anybody that know about Idaho, do you really think that's going to be held up? No, no way. No environmentalists are in Idaho. If they are, nobody's listening to them. So Thunder Mountain Gold, Falcon Energy. I like these guys. I talked to the CEOs of all of this, especially Andrew, even leading those English. But the CEO of Falcon, when we talked, and they're doing something interesting. In Morocco, there is an auto industry there. They are building electric vehicles right in Morocco. And these guys are strategically located in Morocco, and they actually are building a refinery plant that will refine graphite. And that's what the CSPG, and right now I can't think exactly what it stands for, but this is essentially graphite. And it's a special alloy that's out there. And so they had some feasibility studies already that were very favorable. And they also have offtake agreements already for the graphite that this will generate. They're expecting to start by somewhere in the second half of 2027 to start actual production and producing graphite. But what that means to us is, since we're in the stock, we started buying Falcon right at about 60 on the private placement. The warrants are at 75 cents. But there's been some analyst coverage out there at $1.25. I did some internal looking at the cash flows from when this plant will come out, and the value of that is at least $2.50 bucks a share to about $4 on the aggressive end. So even though this analyst coverage is saying that's within the next year, it can run up even higher than that. But a nice solid position here in graphite, and we'll de-risk it because we're actually producing something again. So these are just some of the key acquisitions that we made. There's been a lot more, and there's a lot more coming. So let's look at where we are in the world, and a little bit of a crude map. You can see the legend down here in the corner that shows gold, silver, copper, graphite, and this other stuff, and then zinc and silica. And mainly the blacks in this gray is more of in the lines of critical minerals. It may be some rare earths in there as well, and I'm sure people have heard about that. Those are a lot smaller, but you can lump them into there. So we're in North America, obviously in the US and Canada, down in South America with some silver. Brazil, we've got some investment with MFD, so we got exposure there with a gold mine that they're going to bring into production probably within the next 2 quarters. Heavily located in Ghana and Morocco, where we've got gold, copper, and manganese and titanium. And graphite, of course, which I already talked about. And then all the way over there in Mongolia, we got some additional silica, and then silica in Canada and some positions. And so all of these are areas we'll grow even more, and we'll start even getting even more spread out as we grow and start to diversify. I'm thinking on the public side, though, I probably would not have no more than 15 to 20 positions, because if you start spreading out too much, then you're over diversified and you're going to be where an index is. And I failed to mention too, the index for building materials, last I looked, was 30%. And so that's our benchmark. It's not the S&P 500, which is about at 19%. Ours is more sector related, but again, we're doing things different than just the sector going into that. We're really cherry picking these assets, and we got the connections in the network. Future acquisitions, I kind of touched on that a little bit. We plan to increase our holdings in MFD. A piece of that, small piece, but I know what they're doing, and I'm excited about it. And I said, give me whatever you can get. And so we'll increase our holdings there a little bit for cash flows. We started we acquired our first exposure to NSRs. And if you remember what those are just royalties. And ours has exposure to the silver commodity, which you've probably seen that on the news. It's hit all-time highs at 62 cents an ounce. We saw that at least 6 months ago to say that we should be and have some exposure in silver. What people don't realize, though, is it's kind of hard with silver because silver is in a standalone mine. It usually is, it coincides with copper or gold or something like that. So it's usually a mine mining gold and then silver. And so in order to get royalties off of that, we partnered with a company that specializes in that. And they are fully capitalized now. They don't have to raise any more money. They've got their positions in NSRs, and we'll piggyback off of that and get cash flows. Again, another stabilizer for our portfolio. I'd love these 3 and 4x returns, but we got to be realistic. I'll take them as long as we can get them, but you can't just keep expecting that, or you'll get crushed. And I had an experience for that. And then I mentioned again special project vehicles, or special purpose vehicles, whatever you want to call them. We want to start doing some of those as we grow, like the one I mentioned that Thunder Mountain Gold is doing. So that's some of it in the future. And then I'm going to share a few clips and then kind of tell you what's happening. If you look at the picture, what that is the rock breaker. First of all, rocks, that orange piece of equipment. If you look at the back, you'll see an excavator and it's loading up. There's a bulldozer there, and occasionally there's that's a loader. And then there may be a truck there coming to then take it, but put it in the small cluster there. You see a few little small, this is small scale mining. Excuse me, that small scale mining that you just saw. And Leah and I were there, what was it, the end of 2024? Or was it
23?
23, excuse me. So yeah, 2020. We was there, it was nothing but barren desert. And MFD, along with, I was helping to launch that with those guys. And we were at that property. What was out there? Nothing. And so now you see the progress there. Here's a few examples of some copper mining that we got in Morocco. See some of the tail and everything, and what happens is once the crusher gets certain sizable pieces, it goes to a bin and then it's taken somewhere and cleaned and everything else. And this is some of the tail end of it. And there's still copper in there, so this will be recycled and then again, you want to get as much as you can at first, not just but you want to capture or not lose anything. And that's why you have some tail. And here, we're looking at some cleaning. Rocks come out, with lures, the material comes where. And then the last part is a photo, just of some additional solution type materials to make a leach pad. So they're building a leach pad there that actually starts to, it's in biology and they, and I don't want to get too technical, they kind of eat away at the rock and everything and then leave what we want to have. Because they can't digest and set up that. So they're building small leach pads there to get the teams over there now in Morocco. That's why Branimir is probably not on the call. He's in Morocco along with Tony and all the other guys over there. And what's going to happen as we grow, like I'm saying, once we get to a certain size, then I'm going to have to be over here taking on some of these as we get bigger. And probably the region of West Africa is what we talked about. So because the deal flow is getting too big for even MFD, so we'll get up to speed and handle that. We'll talk about some financials a little bit, and I think we're in excellent shape. We sent these out to everyone, and we have a balance sheet and an income statement. These aren't audited or anything like that, or done by an accountant. We have an audit that's already in the process of starting by Candace, and that's by law that we have to do that. Those will be much better numbers, but these are pretty accurate. We have no debt, zero whatsoever. Don't owe anybody nothing. I'm not obligated to answer to anybody. I make the decisions. Nobody else does. I give advice and everything, but I am the ultimate decision maker. So there's no puppet out there. I'm not like that. I control this thing. We got a lot of public assets. The goal is to get 75%, 25%, as you probably remember. And the reason why we want to do that, I like liquidity. I want to make sure that once we get nice positions, I can blow out of them. I know what they're worth, and then I can pay investors and dividends as we go along and then buy more. But we do still want some private assets, and we'll continue to do that. But we want to keep the split at 75-25 because our sister portfolio is kind of the opposite of that. And actually, they're moving more exclusively to just private. And so very easy to look at. Again, our cash receivables and cash on hand, somewhere around 434. And then if we look at our income statement, capital raise is nearly $1 million, but we've grown the hell out of it. So instead of, again, taking money and paying me something, I put it in the market because I said, my net worth, a lot of that. I've invested in the Joyce and eventually, well, she's already with me, so she get it. And then all these other people in the Cayman Islands that we got to pay, and Dementi and everybody else. So we're making the investment. So our G&A is going to go up, but this was our G&A this year. Hardly nothing compared to where we are. And most of the money, like I said, is invested. We may have some net income. That's the cash on hand that we had currently minus it's anticipating the operating expenses that we have gives us the net income of that. There's no tax situation because we're in the Cayman Islands. Who cares? We can make as much money as we want. This one's a little bit busy. And I would have printed it out for you, Lou and Faye. But I'll make sure you just get a copy of it. So this is just some projections. And I did these projections back in second quarter of this year. And again, there's the total value, and I had a stretch goal. I was going to play out a dividend, but in the advice of Branimir and Stephanie, I forgot, and I realized they said, you're not even a year old yet. I was thinking, dividend, I want a lot of this, I want a dividend, but it doesn't make sense yet. And then with, and Davidi's going to talk more about it, we'll definitely have something next year. we got about $2.2 million in unrealized capital gains. So what that means is that's profits that we can distribute, not all of it. We got to invest a lot of it. We're still growing, but there's some opportunity there. So 5 million was the bogey. We're knocking over 6. We thinking we'll get somewhere in 12. I think we'll probably exceed that too. Where we want to end up at is about 30 by year 5 conservatively. If we're growing at where we're growing at now, it's going to exceed that. But if you count that in the cash flows, what we're projected to generate, and that's saying appreciation from where we are up to 30, almost $38 million. And I'd be very happy with that. But with the performance that we're having and that the way we've been able to raise money and everything, I wouldn't be surprised that we exceed that, especially with the team that we have in place. Again, this was put together before I had Joycelyn, Venti, and everybody else. It was the one-man gang, and I was saying, okay, if I do this, you see some of the positions there, they're recognizable. I put additional because I don't know where we're going to buy later. There's some of the private stuff. We got MFD Zinc Resources, which is zinc. South Mountain Project, that's that SPP that I was talking about. And then we have some additional private type investments that may come about. And these are just values, not purchases. And so again, we're staying true to our objectives, staying lighter here, more heavier on the public stuff. NSRs, we want those. This was done then. We already have a small position in NSRs, and we'll probably build on that because when I bought that position, 5.5 cents, and it's at about 6, but it's designed for cash flow, and it's still discounted compared to the price of silver. Then when you look at special assets, Project Plus Consulting, that's where I bill under, and that's the consulting arm of what we're doing. What I'd like to have happen is to get some additional billing, not just me, but others. Right now, we got contracts worth about $500,000. If I can get that up to maybe 3 million, something like that, I would sell off a piece of that to PPI, and then they can participate in some of those consulting fees, which is good cash flow. The stealthy wealthy, that's our only, and you can see it's very light that we're projecting. There is a clause in our objectives that something less than 5% is my discretion if it's something nice or something that makes sense that can enhance our returns. And this would be less than 1%. I really want to stick to mining, but this one intrigued me a lot. It's a guy from Princeton, brother from Princeton, young guy, very smart, that's plugged into these people that are franchise owners of McDonald's and Chick-fil-A and all these. They're experts at that. And if you think about it, most people that want to run a franchise like that are between 26 and 36 years old that want to buy into a franchise. But what's the problem when you're 26 and 36? Do you have $500,000 liquid?
Right.
More than likely you won't at 26, especially if you planning to do a chicken franchise. I'm not putting on a chicken suit. Lou ain't putting on one. No choice. I know she ain't either. And most of the investors here are not. But what they came up with, he said he's going to raise $10 million. He's going to see these young entrepreneurs. They're going to capitalize these people. They're going to provide the expertise and everything within their ecosystem to make them successful on already something that's already got a system and successful. And then they're going to take 33% of the company. Right. And so what I looked at, I looked at the numbers. I said, money back in 2 years. Yeah, put me down for 100. We'll do that. And so that's what that is. That's the stealthy wealthy fund. Excellent idea. I think to mention, everybody, the stealthy wealthy fund gets their money back before they start splitting the 30% split. It's sort of like all of the cash flows first, and you bake into paying the franchise owner first. Once everybody's paid back, then they'll go to that 70-30 split. So excellent idea. very small exposure, but worth mentioning. And then finally, we will always try to keep some cash. The reason why that's so big is that we expect to raise a lot of money. We expect to be out of raising money for this fund after the end of 2026. And so that's why that big bubble is there, and then we'll start investing it as value investments do. And then we always want to keep some cash on hand for liquidity. I may start maybe offering tender offers back to people who want to get out early. I can do that. MFD's done that. And that's why we were able to get a piece of that. They started buying out, and they wanted to go to mainly just institutional investors. And so that's what they did. So gives us the flexibility to do that. You don't have to do it, but you throw that out there. Okay, $3 a share. Somebody might say, okay. Well. And so you want to have that liquidity available. So again, in the end, this is probably an annualized return of something like 60% is what this will be. Which I had to rethink the projections. 30% is what we're going for, but when you have a year like this, it skews the number in our favor.
Okay.
All right, so right now, I'm gonna shut up and I'm gonna let, I'm just gonna give some oversight. There's two major initiatives that we're doing right now. And I would like those people that are working intimately in those areas to talk about it. So the first one is that we're going through a little bit of corporate, not restructuring, but I would say it's evolution. We are going to now we're a holding company, and now we're going to be registered as a fund. And that has a lot of advantages. And it should give a lot of people that are investors a feel of comfort because of the increase of regulation that we have to go by. So Devente Williams, our general counsel, is going to talk about this. Devente, floor is yours, bud.
All right, thank you, Kamar. Well done. So
And then you're a little low in this room. If you could speak up a little bit or turn your mic up or whatever.
all right, can you hear me clearly now?
I can, but it's they didn't give us a nice speaker system in here,
Okay.
unfortunately. But
See if I can-
I think it can you hear? Okay, the people in here can hear you, and I would assume the people that's virtual can hear you.
Okay, I'll try to speak up a little bit louder then. So my name is Devente Williams. I am general counsel for PPI, and what I wanted to do now was take the time to talk with you about some of the developments that are going on for our corporate restructure. Now, Kamar says from his comment that he just made, he doesn't see it as a corporate restructure. That's what it is. He's just seeing it as executing what his plan was from the very beginning. So that's also true.
Just like a lawyer.
Yeah, well, I want to I want to be specific with these guys. So Kamar has mentioned a few things that have sort of indicated what we're going through, but I want to make sure that the shareholders and everyone else has a more deeper understanding. So what has happened is that due to Kamar and Leah's wonderful strategic leadership and their hard work, honestly, PPI has grown faster than what we anticipated, and that's a good problem to have. And so what has happened is that the proof of concept has been met. So in turn, what that did was it advanced us on whatever the plan was in terms of, when you hit this milestone, this happens, when you hit the next milestone, et cetera, et cetera. So what we've had is growth, phenomenal growth. And the next step in the plan was to move offshore, right? So I'll talk with you more about that, give you some insight to what that means, the additional requirements now, how that benefits the shareholders. So just give me a moment, and I'll try to articulate some of these things to make it more clear to everyone. So moving offshore, which was the plan from the very beginning, it's now just moved forward.
Real quick, Devente, just to shed light, we've been offshore, but we were a holding company, and now we have to be listed as a private fund. Yeah. Just wanted to clarify that.
Okay.
Go ahead, sorry.
So no problem. So under Cayman Island law, what we viewed ourselves as is a holding company Well, they view us as something different, which is a private investment fund. So under Cayman Island law, that required a restructuring, which adds some additional requirements, which we're meeting, but we want to make sure that we articulate that to you guys. So I'll start with, first of all, why the Cayman Islands? For those who may be unfamiliar in the details, I'll go with that. So we're talking for tax purposes, protection of assets, confidentiality, and also the ease of operating internationally. Cayman Island lends to those types of benefits for corporate structures. So under Cayman Island law, as we mentioned, you